Good afternoon, everyone. Welcome to the Orange County Funding Corporation Audit Committee meeting. It is now 5:05 on Wednesday, March 5th, 2025. And we're going to ask Bill to do the roll call, please.
Yes, Dean Tambury,
Present.
Mark Green,
Present.
Jeff Christ.
Here.
Okay, we have two committee members present. One is absent tonight, and another board member, our chairman, Mr. Christ. For staff, we have myself, Bill Fioravanti, Kelly Riley, and Marty Barras, who's remote. We have our team, audiovisual team from acquisitions, marketing, Billy Iverson and Dylan Burke. We also have our state monitor, Victoria Barrett, joining us remotely, and our guests are our auditors from PKF O'Connor Davies, Melissa Zott, and Colleen Harris. Is that everybody?
Yes.
I think that's it.
Yes, thank
Okay,
you, Bill. Proof of notice of this meeting was properly provided, and it's in our packet. Thank you, Bill. And we have minutes to be approved. The minutes are from March 13th, 2024 Audit Committee meeting. As you can see, we have these, don't have these meetings often, but we do have them. And this goes back to March 13th, 2024. And I'm gonna, unless anyone has any questions, I'd like to get a motion to accept the minutes of March 13th, 2024. I guess it's up to us. Mark?
I will make that motion.
I'll second it. Any discussions?
No.
All right, so all in favor?
Aye.
Aye, we just said it. Thank you. Motion passed. Those minutes are accepted. Thank you, Bill.
Thank you.
And new business, take it over.
Yeah, this is our annual audit for 2024. This is our third year working with PKF. I think it's gone better every year, and it was a great year, very efficient. Many thanks to Kelly and Marty in our office, because their support is essential. They've got the hard work, for staff for this, for sure, and we appreciate it. But I think without further ado, we'll turn it over to PKF, please.
Great.
Thank you.
Thank you so much, I appreciate
Thank
it. My name is Melissa Zott. I'm the engagement partner on the external audit. With me is Colleen Harris. She was the supervisor on the audit this year, and she was, again, the supervisor 2 years ago. What we've done is we've prepared a PowerPoint for you, so we will go over that first. The first page, or page 2 really, is the agenda, or the table of contents. So today we're going to just go over some required communications as part of the external audit, and then we have some year-over-year change. So we'll go over the income statement, and then we'll go over the balance sheet changes. So on page 3, there are certain responsibilities as part of the external audit. First, management and those charged with governance, that will be the audit committee and the board, have certain responsibilities. First is making sure that the accounting policies are selected and appropriately implemented. Secondly, making sure that the financial statements that we have in draft form are fairly presented in accordance with the United States generally accepted accounting principles. Internal controls are always an important part of any organization, so making sure that you establish those controls as well as do a periodic review to make sure they're maintained and properly in place. Compliance with any laws or regulations or provisions of the contracts that you enter into. And then lastly, providing us as your external auditors with all of the financial records and any other information that we request. Again, we want to give a thank you to the IDA team, Bill, Kelly, and Marty. Without them, we couldn't really complete this. So, and Shannon as well, because she's the external CFO. So thank you so much for that. On page 4, we also have responsibilities as your external auditors. We are required to form and express an opinion. While the reports are in draft form, we do anticipate issuing an unmodified opinion. That's also referred to as a clean opinion, so it is the best opinion that the FC could receive. We also issue a yellow book report that's over the controls of the organization. We have prepared a draft management letter, which would include any communication of any deficiencies in internal controls. We report on your accounting policies, make sure that they're appropriate. And then any fraud or illegal acts that were noted during the audit, we would have communicated to you prior to today, so we're happy to report that there were none noted. We did not identify any significant difficulties as part of this audit. All misstatements that were identified, if any, were corrected. No disagreements with management, and we are required to maintain our independence with the organization. So I'll go ahead and hand it over to Colleen to address the year-over-year changes.
Okay, so on page 5, I'll start with the income statement changes, 24 versus 23. The thing that'll stick out to you most significantly on this page is the increase in professional fees. That is attributed to, as you know, the management fees that the IDA is charging the OCFC in 2024. That's about like almost 97,000 of that 120. The other changes, you'll note that there are some lines where there's no revenue this year. That's just inactivity in those accounts. And then the interest income, if you scroll down to the non-operating revenues, that's pretty much flat, and that'll make more sense when we go to the next page, page 6, where we look at the year-over-year change in the balance sheet. And right away you can see that in 23, the cash and cash equivalents was 1.3 versus this year 191,000. That's because in 2024 there were 2 U.S. Treasury bills that the OCFC went into. Last year it was just the CD. So that kind of explains that interest kind of remaining flat in the prior year. And that was the most significant thing on the balance sheet side. Everything else was just normal ebb and flow of transactions, timing.
So that would be the, essentially all of the changes year over year. So you did, even though you had a significant amount of interest earnings, your net position did drop just about 39,000 this year. If there's, we can take questions on the numbers, otherwise we can move to the management letter, if you like.
I think I would just note that, I mean, we've talked before about sharing expenses, which we didn't before, and we think this amount is correct, and we're gonna continue forward with that. So that's some of the changes that we are represented. So the only other question, and maybe this isn't, but it's like, so when is the final? You said this isn't, you know, when does that happen? It was after we approve it, or, you know, the rest of the board, or?
Sure, so we present the draft to the audit committee. After the draft, we are, I believe, waiting on a legal response. We basically reach out to your third-party attorney, make sure that there's no litigation outstanding that we'd have to disclose in the financial statements. If there are, we would update that accordingly. I think we're waiting on some final analytic responses from Shannon, so that shouldn't be too tough to get, and then we can issue final. Part of the finalization process is we would send Bill a management representation letter, and what that does is just represent that the OCFC has provided us all of the information, that everything provided is true and accurate, and he would sign that, and then we can issue final at that point.
And that's gonna happen before our full board meeting, Bill, or would that happen after?
Before.
Okay.
So if we move on to this document, this would be the report to both Charter of Governance, and it also includes our management letter. On page 2 is just a letter to the OCFC, just thanking you for allowing us to provide you this service. Page 3 is a table of contents. Page 4 is some of the status of the audit. So essentially we will be issuing an unmodified opinion. You do have your Paris report that is due by March 31st. Page 5, the next couple of pages, these are the required communications. Most of these I represented to you in the bullet points in the PowerPoint, just to kind of simplify it. I do want to point out number 8. On page 8, there are some significant risks. We do perform a risk-based audit. So as part of that audit procedure, we identify the risks associated with the OCFC, and you'll see similar risks in the IDA. Generally, the first one, management, override of internal controls. Management generally has access to a majority of the controls and the processes in place. However, we are required to perform certain procedures to overcome those risks. So we did apply audit procedures for this risk, and we did not identify any issues with the internal controls specific to the management override. The next significant risk is improper revenue recognition due to fraud. This is a risk that's essentially presumed to be a high risk by the AICPA. So if there's any fraudulent activity or any improper revenue recognition, we have to design specific audit procedures to help overcome this risk as well. So we are happy to report that we did design those procedures, we performed them, and we did not identify any issues related to this. On page 10, this is our opinion on internal control over financial reporting. We are happy to note, first, there are 3 different levels. Material weakness would be the most severe level. Your significant deficiency would be the level below that. And then you have just control deficiencies, which are usually best practices at this point. We are happy to report that we did not identify any items to be material weakness, as well as we did not identify any other deficiencies as part of this audit process. Otherwise, they would be listed behind this opinion.
Thank you.
And then page 11 and 12, these are just upcoming GASBs that would impact the OCFC. Again, they are similar to the IDA as well. If you have certain risk disclosures, that's GASB 102. So if you have a concentration in a specific revenue or in a specific expenditure, that would obviously create an additional risk to the organization if those ended up not coming to fruition. And then GASB 103 is related specific to the management discussion and analysis. It provides additional changes. The other thing that would impact you, I believe that would be the only thing on here. So we would work with OCFC if we move forward.
Excuse me, so these are new, this is new for this or this was part of this?
So it would be new going forward.
Going
So
forward.
if you look at the bolded sentence, GASB 102 is effective for your December 31st, 2025, and then GASB 103 is December 31st, 2026.
Okay.
What's fortunate about GASB is they'll issue these in advance, you have time to prepare and implement them accordingly. If we move to page 13, these are just an adjustment that we posted to essentially record the treasury bills at fair market value, and then your CDs do earn interest quarterly, so we accrued that interest as well. And that was the only adjustment that we saw during this audit. As I spoke to in Appendix 2, the management representation letter, that would be the following pages, so this is essentially what Bill would sign to represent that he's provided everything to us. And that would be the conclusion of that. So I think that really concludes our presentation on the OCFC.
Can I ask a question?
Absolutely.
All right, so it's actually to Bill and to you all, and I'll ask the same question again in the IDA. How woven are, the recommendations that we've gotten from Anshin? I mean, are they aware of I guess what I'm trying to say is, as we continue to do best practices,
Yes.
right? That Anshin said, you guys are fine, but you could be better. As we continue to do those dovetail with this process or with requirements? I'm trying to see that there's some positivity
Yeah.
to make up a
I
little.
would say that on the whole, there's very little overlap.
Okay.
There are certainly on some financial controls, things like that, but I would say that Anshin is focused on so many other areas. For example, this last quarter, a lot of drilling down on our local labor policy and adherence to that, monitoring of that. Those aren't things that they're specifically examining. So I would say it's more operational, what Anshin is looking at, and again, they're looking at everything. It's pretty comprehensive, so there's a little overlap, but not a lot,
Okay.
generally. Would you agree, Kelly? Yeah.
That's all I had. Thank you.
Good question, thank you. With that, I'd like to, Mark, I'd like to ask for a motion.
No
Focus.
To bring this report to the full board for approval at our next meeting.
I will make that motion.
I'll second it.
Fantastic.
All in favor?
I am in favor.
Me
Aye.
too. Thank you very much. And then I'll ask for a motion, I'll make the motion to adjourn, the meeting. Was there something else?
Still need a second? No, we're good.
Yeah, I'll make a motion to adjourn the meeting, at 5:20 PM.
I will second that.
All in favor? Aye.
Aye.
All right.
Meeting for the, Orange County Funding Corporation has ended, and you do not, did you want to cut to move, or you want to continue?
I think he just needs a, not even a minute.
You're ready to go.
Okay, great.
Okay.
Terrific.
Thank you. Good afternoon, welcome to the Orange County Industrial Agency Audit Committee meeting. I'd like to call the meeting to order at 5:20 PM, Wednesday, March 5th, 2025, and ask for a roll call, please, Bill.
Dean Tamburri,
Present.
Mark Green,
Present.
Jeffrey Christ.
Here.
Two of our three committee members are here, plus our chairman has joined us as well. For staff, myself, Bill Fioravanti, Kelly Riley, and Marty Barras are remote. We also have our AV company here, Acquisitions, Billy Iverson and Dylan Burke. Our state monitor from Anshin, Victoria Barrett's joining us remotely. And of course, we again have our guests from PKF O'Connor Davies, Melissa Zott, and Colleen Harris. That's everyone.
Thank you. The proof of notice of the meeting is in our packet, and it was properly provided and approved. And so now for the minutes are from April 26th, 2024. I know it's a long time ago, but this will only meet a few times a year or as needed. So looking for a motion for approval of the minutes of April 26th, 2024.
So I will make that motion.
I will second the motion. Any questions or discussions? None on your part, none on my part. Motion passes. New business, we're looking at the annual financial audit by our accounting firm. Thank you.
It's all yours, Melissa.
Great, thank you so much. So again, we prepared a PowerPoint presentation for the IDA. The table of contents, we do have required communications, as well as we'll go over the year-over-year changes. The required communications are similar to the OCFC. Would you like me to go over them again for the IDA meeting as well?
Maybe swiftly?
Sure, no problem. So as part of the external audit process, management and those charged with governance have certain responsibilities, making sure that you're selecting and implementing appropriate accounting policies. The financial statements should be presented in accordance with the U.S. General Accepted Accounting Principles, internal controls, making sure that you establish and maintain those controls, any compliance with your laws or regulations and contracts, and then providing us the financial records as part of the external process. I definitely want to give a thank you to the IDA team, so thank you very much for that, for providing us everything timely. Us as your external auditors, we also have certain responsibilities. Importantly, your independent auditor's opinion, which is the opinion we issue. We anticipate issuing, as it is draft form, an unmodified opinion that is also referred to as a clean opinion, again, the best opinion that the IDA could receive. The yellow book report would be the report on controls, as well as the investment report. We do issue a management letter that contains any deficiencies, and then we do review your accounting policies as well. We are happy to note that there were no fraud or illegal acts noted as part of the IDA audit. And then we did not identify any uncorrected misstatements, no disagreements with management, and then there were no difficulties as part of the audit. Let's go to page 5. This is our year-over-year change. Because there was more activity, I wanted to provide a summary of the information, and then we'll go a little bit deeper into exactly what happened. As the IDA, you do have operating and non-operating activity. Operating revenues and expenses are specific to the mission of the IDA, and your non-operating revenues and expenses would be secondary to the mission. So your total revenues of 2024 came in at $171,000. That's $425,000 less than the prior year. Your expenses were about 187,000 more than last year, coming in about almost 1.1 million. So before your non-operating activities, you did have a loss of 921,000. Your non-operating revenues and expenses net came to about 1.2 million, so that turned your loss from operations into a positive change in net position. So you're adding to your beginning net position of 9.4, you're adding 312,000, so you end the year with 9.7 million. So let's go into the revenues first on page 6. You can see your year-over-year change. First line is your closing fees that did drop 509,000 from last year. Last year, the 542,000 was related to closing fees for the Goshen developer and the Royal Wine, whereas this year you had a supplemental application that had a closing fee associated with it for the castle. So that would cause the drop. The next line would be the management administration fees. As Colleen mentioned in the OCFC, this is the split for the 16% and the 84% of the management fees being allocated between the two organizations. So that's why you have a new line this year. Third line is going to be your rental income. You can see that that did drop about 16,000 year over year. In 2023, you did have 3 tenants, whereas in 2024, you had 1 tenant, which ended in April 2024, so that did drop significantly in that line. Your application fees dropped about 12,500. In 2024, the 7,500 was specific to the 3 applications that happened during the year, so the Castle, Solitude Solar, and Sky Harbor, so that totaled your 7,500. You had a small amount in your administration fees that you collected, and then you had an other income line. You had 26,000 approximately. Most of this was related to miscellaneous fee income related to the amendments of leases and other miscellaneous revenue. So that's your total operating revenue. So even though it dropped 425,000, you can see most of that was related to the closing fees. You did have some non-operating revenue. Your interest income did increase significantly, so it ended up being 837,000, which you'll see on the balance sheet in the next slides. You did have significant more investments. Your treasury bills are reported at fair market value, so that would cause it to increase this year. The next line is going to be your settlement proceeds line. That is the final settlement payment, so you would not anticipate receiving that again next year, and we didn't have anything received in 2023. So in total, your revenues at operating and non-operating ended at about 1.4 million. If we go to the next slide, this is going to be your year-over-year expense change. The first line is your projects and special initiatives. Last year, 147,000 was spent on this line, whereas this year it's 22,000. The drop was related specifically to the shovel-ready program expenses. Your payroll and payroll tax benefits, there were some increases in the salaries that were approved by the board, and then your payroll tax and benefits decrease related to the profit sharing contribution. Your rent did decrease slightly, so 49,000 to 33,000. I think as we talked about a little bit last year, the way that the lease standard requires us to report it, we have to amortize the lease payable over the life of the lease, which impacts the total amount of rent expense here. The next line is going to be your professional fees, and you can see that's one of the larger of the expenses that the IDA incurs. Last year you had 126,000, this year 345,000. So that change was about 219,000 increase. Of that amount, a majority of it was related to the Anshin contract, which is the New York State monitoring. Mm-hmm. Next, you had a slight increase in your advertising expenses, so that would just be expenses on your marketing during the year. Small changes in utilities and insurance, and then you have your depreciation and amortization. So generally your rent for your lease standard moved down into that amortization line, so that's why that increase in your rent decreased. Those were the major operating expenses, so we did cover about 87%. There are many expenses on the financial statements, but those are the ones we wanted to point out. You could see your other operating expenses did have an 81,000 increase, so it does include multiple lines, but a large portion of that was related to your website redesign this year. And then you had a small amount on your loss of disposal of assets, which you did remove some assets we'll see on the balance sheet. If we go to page 8, this is gonna be your balance sheet. As we talked about in the assets, you have your cash equivalents as well as your investments. We talked about your interest earnings increasing, so your cash and equivalents dropped 3.3, but you did end up purchasing those investments, the treasury bills as well. You did have an increase of your accounts receivable, about 13,000. That was mainly related to the timing of collection of the transfer of those management fees between the IDA and the OCFC, so that was collected subsequently. The next line I wanted to point out is your capital assets, so it's the last line on your assets line. Like I had mentioned, on your loss of disposal, you did dispose of your old equipment, your old furniture, and then that also includes any current year depreciation as well. Next is your liabilities. You do have your accounts payable accrued expenses. They did drop 54,000, but I do want to point out your escrow liabilities. You had 42,000 this year. Last year, they were all reported in one line called the accounts payable accrued liabilities. So what I will be doing on the final report is breaking those out so it's comparable year to year. Last year, you did have 79,000 in escrow liabilities, so those dropped to 42,000. And then your accounts payable went from 50,000 up to 74, so that's the breakout of the 129. Your deposits payable is small, but did stay the same, and then your leases payable specifically relates to the rent associated with the rent expense I mentioned before. So your net position we talked about ended at the year at 9.7 million. It is broken out into different buckets. You have your investment in capital assets, so that's the 39,000. Essentially, that's your capital assets amount, which includes the right to use lease of the asset, as well as offsetting that and reducing that by the lease payable. So that's how we get to that $39,000 number. You do have an amount designated in your 2025 budget for $250,000. I believe that's for your shovel ready program. And then that leaves your undesignated at almost 9.5 million. So that concludes the number changes. If anybody has any questions on those before we move on to the management order.
No, I mean, just real quick, I mean, you know, you back out the 400 because that's one time never happening, so in theory, we had a negative of 87,400. Again, you offset with, you know, what is it, almost 200 to 100 and something.
Yeah,
200,000. You know, again, I don't want to say we're making money, but because again, I think we all would like to see our application fees and such return to where they were, you know, 2, 3, 4 years ago. But we can only control so much of that. So, you know, it seems like, you know, we've been working on costs and working on other things to stay as even as possible.
Yes.
And we're not gonna get, we may or may not get those returns again either, so we'll see what happens. But hopefully we'll have these projects coming in.
It was an unusually slow year though, and it wasn't just our IDA, a lot of my colleagues report the same thing. It was a tough year for development, I think, and a lot of projects stayed on the back burner. We do have a robust pipeline, and things starting to move this year, so I expect it to be different this year for sure.
Yes.
But agreed.
Yes.
Yeah, I mean, I don't have any other comments for right now.
I'm good right now as well. Thank you.
Okay, great. So we'll go ahead and move over to the management letter. Again, the management letter, we've moved past the table of contents up to page 4. Again, you do have your PARES report, which is required to be filed by March 31st. I believe we are waiting on some confirmations to come back from the projects. So when we get those back, I'm not sure if you looked at the financials, but some of the supplemental schedules had yellow highlights because we were waiting on those confirmations. I do want to point out again on page 8, the significant risks. We identified management override of internal controls and improper revenue recognition due to fraud. Again, we did design and apply audit procedures specifically to overcome those risks and to get our level of risk down to low. And we are happy to report that we didn't identify any control-related items or any other deficiencies in response or as a result of those procedures.
Thank you.
On page 10 is our report on internal control over financial reporting. Again, there are 3 different levels of deficiencies. You have your material weakness, which is your highest level. Significant deficiency would be the level below that, and then control deficiencies. We are happy to report that we did not identify any material weaknesses. We also did not identify any other deficiencies related to the IDA audit. As mentioned previously, GASB 102 and 103. 102 is related to your risk disclosures effective December 31st, 25, and then 103, mostly pertaining to your MD&A, would be effective in 2026.
So, you'd mentioned this before, and it took me a few minutes to think about this. So you said, there's time to implement this. Or, is this our responsibility to implement this? Are we prepared to implement this? Are we on track to do this?
Sure, so the financial statements are the responsibility of management to essentially make sure that they're fairly presented. GASB 102 would be part of the financial statement disclosures. We do assist with the preparation of the financial statement, so we would assist with implementing that as well, and obviously coordinating with management to make sure it's all inclusive of everything.
I'm sorry, go ahead.
So 103 is probably the more robust change. Again, the management discussion analysis does make sure that it takes out any redundancy in that, because that's really helpful for the reader, because it provides some insight as to really what's going on with the IDA. So it just makes it a little more clear. We would work with management on making sure that that's appropriate.
In your estimation, and I don't want an exact, and we won't be held to this, but how much of a burden do you foresee for this? Is this going to be like a game changer where this is going to cause a tremendous amount of strife, or, are we, we're already kind of 80% there, we just have to tweak some things? Like what are your thoughts?
I don't believe that these two would be a huge lift for either organization. If you had a significant more amount of activity, a lot of different types and categories of items, it was more complex, then it would definitely be a larger lift. You are a single fund entity, so all of the information is specific to that single fund, whereas like a different governmental agency would have 5 or 6 funds, and we'd have to report on every single one, so it's definitely more complex for that. I don't really think that this would be a big lift.
So you said if we get busier, that's our hope.
Yes.
So, is there a way, so let's say the next, deal that falls, is there a way to kind of run it up your flagpole and say, okay, I'm just throwing this out, is there a way to say, okay, well, look, we just got this nice deal that just came in. What would, is there a way to preface, instead of waiting until next February and then all of us running around like crazy to try and get you what you need, is there a way to say in April or May, like, hey, what would we have to tell you about this particular deal to comply with these rules?
Sure. So I would definitely hold on to, we do look at all of the closing documents as part of the applications and making sure that they reconcile. But what I see a lot of people doing is using the MD&A as almost like a marketing tool, and like helping people understand what you're doing for the community, and the benefits that you provide. So you could really take what you have here and include other things that might help attract more companies to come in and have apply and provide those type of services. But as long as you keep all the closing documents and we include the activity specifically in here, I think would be fine, and you guys already have all the documentation on that.
Okay, all right, thank you.
Then, I was gonna ask it to Margaret, so then you're not just looking at this year end, throughout the year, you're looking at some of these, our statements, et cetera, correct? I mean.
Yes, so the income statement, I'm sorry.
No, I was just saying, 'cause I apologize, I'm not aware that I know we have, RBT doing,
Right.
and we go over and we have but you are also looking at your, our financials, et cetera, as we're going forward, correct, throughout the year?
So we look at the entire year when we come out here,
Okay.
In January, February. So we would look at all of the activity that happened. We review all of the minutes, both the committee and the board minutes, identify anything that was significant or would impact the financial statements. We look at all of the activity for the revenues and your expenses for the year, but we don't necessarily look at them throughout the year.
Okay.
If anything comes up.
I apologize, but I think that's to your point, Mark,
Well,
should we do that?
I'm asking
in
it
the
a
middle
different
of the
way.
year, in the middle of the year. Mid-year.
As, for the last couple of years you've been doing this,
Mhm.
is there anything that you would raise your hand that we aren't currently keeping, saving, documenting? Is there anything we haven't been doing that would cause this to be a problem next year? You know what I'm saying? Like, or are you saying, no, you've got all the stuff,
Mhm.
we just have to massage it a little bit differently?
Exactly. You do have
Okay.
everything you need
Okay,
to do it,
all right,
yeah.
all right, fair enough.
Yeah.
Thank you.
Of course.
Then I'm gonna ask it again, a different, I apologize, it's like, so in other words, with these changes in Gatsby, you don't feel that we should maybe have you look at it mid-year or something, just to make sure that we're on the right track with these changes?
A lot of it,
That's.
oh, I'm so sorry.
No, that's all I was gonna say.
Yeah,
Then
absolutely.
yeah.
So the GASB 103 really relates to the financial statement preparation.
Mhm.
So we wouldn't want to address these until we get into that preparation process. If we do present a budget to actual, let me see if I don't think we do. If we presented a budget to actual, there is a heavier lift, that's the last bullet point, and you have to really provide a lot of narrative as to the changes. So we do get that information as part of our audit process, but it would just have to make sure that the reader's gonna see it as well, not just us. So making sure that that is. But
Okay, so I think it's overkill to try and do, you know.
I get it, yeah.
generally, when there are GASBs that significantly impact or do require a heavy lift, we reach out proactively before anything needs to be implemented, just to help with the assistance, make sure we can answer your questions. We did implement GASB 101 this year, but it's compensated absences, so if you have had any vacation or sick time that got rolled over, gets paid out at termination, we would have to classify that, but there's not necessarily any of that categorized here. For some of our larger municipalities, they do offer a lot of different types of benefits. So even for my June 30 year ends, I'm reaching out now to help them assist through calculating that, making sure that they understand it. So we don't really like to wait until the end for a lot of these
You're
things.
kind of laughing at us right now, aren't you?
No, not at all, not at all.
She's
We like to provide.
She's like, I got a city of 3 million people I'm dealing with,
Yeah.
and you guys are talking about 3 employees, like,
These are all
let's
good
move
questions.
on.
Can I go home, please?
Yeah, she's like, 6 o'clock, let's go.
No, they're all good questions. I think it's important to understand, all the financial impact of these. There's a lot more GASBs coming up. They keep issuing them every year, so.
Thank you.
Thank you.
With that, Bill, any?
No,
Before we
I
do-
think she don't.
Are you done?
I don't think
Sorry,
you're
no,
done.
you're not.
No, I cut
sorry.
her off.
Exactly, right?
That's okay.
Right, not done.
Page 13 is just the correctness statements. Those are adjustments that we identified as part of the audit. The first entry was really related to the GASB 87, so your lease liability and then your right to use asset. That was just a prior entry. And then the second would be to update the leases based on the current year amortization. The third entry was related to your treasury bill, putting that at market value, and then your CD earns interest quarterly, so we put that as well. Appendix 2 is your management rep letter, so that would be what Bill would sign at the end when we're ready to issue, just representing that everything was accurate, provided to us, and then a flyer about us. So that would conclude the presentation.
Before we move to a motion, can we check in to see if Jeff had any comments and
Of
maybe
course.
Victoria online?
Of course.
Any questions or comments at all?
I think I'm okay, thank you.
Okay, great. And Victoria, just want to give you an opportunity if you had any questions or comments?
No, I'm good, thank you, Bill.
Thank you.
So with that, thank you again for the presentation. I appreciate it, both of you. And I'm going to ask for a motion to bring these reports to the full board for approval.
If I make the motion, can I still talk? Because I still have another question or comment.
Yeah, well, I was going to ask once you.
Okay, I will make the motion.
Any questions or discussions?
Yes.
Second first, maybe. Yeah.
Second.
Okay. Any comments, insights, thoughts, how we can be better? Anything that, you know, how have, I've asked our team, but I'd like to ask you, how you have seen the process go these last three, you know, let's say 2022, 23, 24. Are we becoming more efficient? Do we still have things that we can do better? Any kind of thoughts from you all, how we can improve this process and be better at it?
Sure. So our external audit specifically focuses on the financial information of these two organizations. I think if you notice, go back to 22, we have the management letter comments that we identified. Generally, we have a couple of those. It went down, I believe, to 1 last year, and then those were fully resolved in this year's audit. So that's what we generally like to see. We like to see them addressed and not repeated year after year. So I'm very pleased with that.
I think 2 years ago, pardon me, Melissa,
Yeah.
was the credit card policy, which we implemented, and then the capitalization policy last year. So I think it was
Yes.
1 each, I want to say, but
Yes,
we
I
did
think so.
implement them immediately. So
Yeah, which is very helpful, because sometimes we have to repeat some of the comments because there's just so much going on, or there might be other stuff that are maybe more important during the year. As part of our audit, we did read through Anshin's report as well, just to make sure if there's any impact related to these audits. There was only one financial thing, and it was related to segregation of duties. We do factor that in as part of our audit, and we do design audit procedures in response to that as well. And we didn't find it significant enough to report it as a deficiency on our end, because there's enough reviews, the board reviews everything. Generally, I feel like that comment is more of a preventative control rather than a detective control. The organization has a lot of detective controls in place.
So in talking to the team, it seems like 2 years ago, when you all came in, you were here for 5 days. Last year, you were here for 4 days. This year, you were here for 3 days. What do we have to do to get you here for 2 days? I mean, there's a finite number, right? I mean, like, you know, it's more than 10 minutes, it's, you know, but is there anything that you can conceivably suggest that would help us continue to move forward and continue to expedite this procedure and to make sure that you all are getting everything you need when you need it, so you can do what you have to do?
You know, Shannon does a good job of reconciling everything and providing us with the audit schedules that we need. So that would be the first place I would look if there wasn't anything related to that. Obviously, your allocation between the ID and the OCFC is new this year, so we did see the invoices. I think we created a schedule just to recalculate those percentages, but maybe having something like that probably would be good. I'm sure that she did, but we like to recalculate it anyways. Generally, I would say I wouldn't want to be here any less than 3 days, generally, because we want to be able to look at everything. But if things are uploaded or if you have invoices ready to go, they use the Dropbox, which is really helpful.
This was not again, there's a finite, you have to come
Of
here.
course.
Yes.
You know.
Yeah, of course, there's things uploaded online in advance, and of course, we could look at it remotely, but our preference is to look at hard copies as much as possible when we can, so 2 days would be like
Old
the.
school, love
I was
it.
gonna
Yeah.
say, I wanna have it in my hand.
Yeah.
Yes, yes.
Well, hopefully you're here a little longer reviewing projects, Mark, I hope.
I hope, well, yes, again, if you have to be here longer because we've got more things going on, then quite frankly, nothing would make me happier. But I believe in efficiency, I believe in that we can always look at ourselves and say, what can we do better? That's what the question is, it's not to somehow point fingers, because I think they do a ridiculously fantastic job. And that's not what this is about. It's about constantly saying, if we can tweak the process, if we can make it smoother, easier, more transparent, so that when you're looking at things, you're not hunting further, that's the goal. And to me, it sounds like we've gotten pretty close to that, which is great. But I also am the type of person that never says, well, this is how we've done it, so let's just keep doing it that way. Like, no, let's always look in the mirror and say, what can we do better? How can we be, more efficient? So I appreciate your honesty, and again, I hope I said it loud enough, how just what I've seen over the last 2-3 years. You and Kelly, Marty, I'm not even gonna look at you, Kelly,
Yeah.
Marty, thank you for everything, thank you.
Thank you.
Yeah, I was gonna, say the same thing, thank you everyone, I think it's a good report, it's nice to have everything cleaned up, and, hopefully we'll have other projects for them to go through.
Absolutely.
So, thank you again, and with that, now we'll take a motion.
We have the motion
Yeah,
second, so just
second.
need a vote.
Vote?
Aye.
Aye. Motion
Right.
passed and bring to the full board. And then, any other,
No other business.
no other business? Okay, thank you everyone, as for,
5:51.
I'll make a motion to adjourn the meeting at, 5:51 PM.
I will second that.
Second, all in favor?
Aye.
Aye. Thank you everyone, have a good night.